Alexander from DiamondArm. First off, read this disclaimer carefully. We are going to look at the real estate sector in this video. Here is a bunch of real estate ETFs. I do categorize Homebuilders in this category. Some could argue against it, but I think that you could also see how it could fit. You can see that the performance is really good from the 52-week low, but that also builds a case for a more bearish trade. Let's first look a bit at the seasonality before I fully develop the thesis, okay? So we are in August. You can see that September, October, yeah, you know, it's 50-50 as far as it outperforming or underperforming the S&P 500. So this is it against the S&P 500. So you can see that the later part of the year and the beginning of the year are strong for home builders. Now we go to looking purely at the seasonality of the XHB, and you can see strength late into the year and early into the year. But you can see that we are entering a period which usually is one of the weakest. So throughout this entire history, that's the facts. By the way, the specific name for this ETF is Spider S&P Homebuilders ETF. XHB is the ticker. Now, this right here in front of us is literally all the history available for this ETF. This is the fact. This is the fact, where everyone was buying and selling weekly data points. This here is reality. Given that, we can draw some conclusions. We know that this ETF moves in cycles, major cycles, big up and big down, during the bear market and also during the bull market. Here we have a rally, 37%-ish. Then we have a pullback, you know, minus 27%. And right here as well, this is 2018. All of a sudden, after a big surge, we had a pullback of a whopping minus 35-ish%. We know that this one moves in major cycles because of the underlying dynamics of this space, the home builders. Given that, it means that after this incredible rally, which is without precedence in the history of this ETF, it makes a lot of sense to start to think as a contrarian, looking for bearish opportunities to use options to go bearish, or to alternatively just short sell this ETF. At this point, right here, right now, it doesn't make a lot of sense to me to enter a new bullish position, even though technically speaking, the bulls are in control. If you look at the RSI, you could make the case that we have a bearish divergence. We do not have, you know, sufficient weakness yet in the accumulation distribution line. I would like to see a bit more of a bearish divergence, but, you know, the bulls are in charge. There's a 73% positive correlation with the S&P 500. Let's look at the daily data points. The moving averages are very nicely aligned. We are still above the 5-day moving average, which is the ultimate sign that the bulls are in control. Also, the 5-day moving average is pointing sharply upwards. And we don't yet have signs of exhaustion here on the daily data points. Let's zoom out a bit. Let's zoom out and get a bunch of data. Now, something very interesting comes to the front. When we look at the RSI, you can see here throughout all of these years, all of these days here of trading, real trading in the market, this ETF does not like to be overbought nor oversold. Whenever you become overbought, there usually is a quick reaction to the other side. Same thing with oversold. Because of that, given that we now are above all the moving averages, we have seen a major surge, but we are also now being overbought multiple days in a row. this ETF is basically begging to be shorted at this point. They are begging, the bulls are daring the bears at these levels. To be perfectly clear, yes, the bulls are in control, but at this point it makes more sense to look for bearish opportunities. Here is Finviz. Here is the trend channel, a bit of a questionable trend channel in my opinion. If you look here, you can see that there are options available. It is shortable. Here you can see the performance, pretty good, of course, due to, the bulls being in charge. Sachs is feeling a number 3 hold, though, for the home builders. Here you can see the dividend and the PE. From a PE standpoint, the XHB has the highest PE. The FLM is 9, which is much lower, and that is the Global Engineering and Construction ETF. Which is, a bit different from the home builders, but some kind of a bit related as well. If you look here at the dividend, there's a 0.82% dividend, so basically you can't make really a dividend case for the home builders. The FLM, well, we did look at FLM, it has a much better dividend. If you look here at fund flows, let's look at it a bit here, last 3 months. I mean, there's been a drop. Though. There's a bit of a declining trend here when it comes to the volume, which is makes sense given that the bigger players, they like to get deals, and you are not really getting a deal here. If you look here at the holdings, you got Whirlpool, Carrier Global. They make air conditioners. You got Lennox. You got Lowe's companies. Do I see Home Depot here? I don't see Home Depot. If you look here, get some breakdown, you can see that 60% consumer cyclicals, rest here 31% industrials and other. Market cap breakdown, you do actually have some balance here. Okay, so to sum up my take here on the home builders. Given that this one moves in cycles, it makes sense to go bullish here after a major pullback. It makes sense to go bearish after a major rally. During some of the previous major pullbacks, there have been signs of exhaustion before the plunge. The bulls are definitively in control at this point, but I would put this on my bearish opportunity watch list. Okay, let's now have the chart frenzy part of the video. Let's first here start with American Express. We are using weekly data points. So here you can see something rather interesting. So this is no post-financial crisis, but this stock, it's been moving in this very major cycles. This is also a case of someone feeling the cycles, but these cycles are much bigger, huge. Well, I mean, this is basically like a bull and a bear market. If you take into extent both the fall and the duration, because this is like 602 days, so you could certainly make the case that American Express had its own bear market here. We have seen a bit of a bounce off the lows here, but you can see that if you look at how tall these candlesticks are, there's obviously extreme uncertainty here when it comes to American Express. The traders are really struggling with this one. Given this major reversal candlestick here, and I would just stay a bit away from this one until a clear tradable pattern emerges. It's a bit too erratic, and this is very frustrating because whether you are putting on a short position or a bullish position, you can easily just get thrown in and out. Let's look at the Chevron. As here we have a bunch of years. Something that I hope you see immediately is that there's this major cycle here, and then you have another cycle that looks very similar. So there obviously is a similarity here. What's very interesting, of course, is this, what if this is the beginning of a new major cycles? Because we have seen in the past that the rising cycles, they can be quite extensive. This right here was 91%. We do have a bit of a rounding-ish formation here, which they can certainly play out in a bullish manner, because it basically is the story of the bears dominating, then there's a standoff, you know, it's more even, and then the bulls start to get the upper hand. So I would put this as a highly speculative bullish trade, but it is very speculative. Next we have Merck and Company, clear cycles, and this looks like an emergence of a new rising cycle. We have broken out above a bunch of horizontal and moving average resistance levels. It's interesting, but you know, some of the easiest gains have been made though. I personally prefer to enter a position when I'm relatively early in a potentially bullish trade, or I am early in a bearish trade. Okay, let's go to RTX. That is Raytheon Technologies. This is more interesting from like a charting perspective. You know, the kind of charts I want to see. You do have these very clear cycle patterns here, small cycles, but rather clear. Let's see how reliable the cycles are. That certainly varies. These are actually rather, you can see here that for quite some time the cycles have been relatively reliable. Could make the case that we are entering or in a new rising cycle. Interesting. What becomes even more interesting is that after, you know, we have had this major pullback, you know, during the pandemic, but it seems like a low is being formed here. A base has been put in place. You do have higher lows. You don't have a clear trend of higher highs yet, so it's a bit of an undecided pattern. But I do like that the bears are struggling to push it down. It seems like there is a floor at least. It's interesting. Speculative, but interesting. Then we have Verizon Communications. As you can see here, it's a rather erratic chart in front of us. Many cycles. Here, as an example, this move alone was 21%. And if you take, as an example, this one, from this high to this low, that was minus 10%. Hence, Verizon Communications, it works really well for trading. You can see here with the wick of these candles, they're very tall. I mean, there's a lot of activity with the right horizon. Hence, from, you know, swing trading perspective, even day trading, Verizon can be really good. But if you are more of a longer-term investor, I can certainly understand why you would find this very frustrating, because, you know, 1 week you get into your account and you see a good gain, the next week you have all of a sudden nothing or a loss. But yeah, basically, whenever you put on a trade, I would certainly recommend that you look at the sort of like the history of the of how the market participants like to trade it. And so when you see a chart like this, then you know for a fact, the data is in front of you, you know that it moves a lot, up and down, and can be potentially frustrating if you find that frustrating. If this is actually something you find very tantalizing, then you are going to obviously like that. But find securities that match your own psychology. Whatever you do, of course, don't fight the trend, and may the trend be with you.